Only a few places to hide in today's selling as tech's downturn pulled everything with it. That includes Bitcoin. It includes gold. Bonds remained up on the day and the dollar pushed back. Let's look at some of the charts here on the stuff getting beat up. First, Gareth Soloway rejoins us, the chief market strategist at InTheMoneyStocks.com. Gareth, as we were talking Bitcoin the last time you were here, and welcome back, the chart hasn't improved much. Tell me how you're seeing it now.
No, the chart certainly hasn't. And I think the biggest concern for me with Bitcoin is comparing it with the stock market, right? So, Bitcoin was actually trading up early this morning above 44,000. And as soon as the stock market started to take a dive, Bitcoin took a dive. And again, that relationship continues to show us that deleveraging has a multiple effect on Bitcoin versus the stock market. So if you're looking at Bitcoin and you see it's down 30+% from the highs, the stock market's only down, 7%, give or take, on the S&P. And that tells us that, again, if the stock market does break lower, you could easily see Bitcoin going much, much lower. Okay,
how do you define much? We've got some lines from your drawing on this chart that looks like a very key area.
Yep. Yeah, so that chart beautifully shows where we currently are, right? We're trading just above the $40,000 level, which is major support. That's the one last hope in the near term for the bulls. If they can hold 40,000, they have a chance to keep Bitcoin up and maybe start pushing higher. If 40,000 breaks, if that line breaks, then you actually have a move down to 30,000 coming. And I fear that if the market does sell off as much as I think this year, you could even be looking at sub 20,000.
All right, so the point is it could get ugly quickly, and that is nothing new for this asset. That's important to keep in mind as well. But that also kind of feeds into a troublesome fundamental narrative, I think, to some extent, because it's supposed to be like getting older and wiser Bitcoin. What's old and wise about doing the same thing it was doing all along, which is drop like 50% here and there every now and then?
I mean, so it's like my 4-year-old, right? She thinks she's old and wise, but she's only 4 years old. So I mean, Bitcoin's not in the scheme of markets that old. We have to kind of understand that. So it's still going to behave like an adolescent. It's still going to have tantrums. It's still going to flush. I love it long term. As bearish as I am thinking about 20,000 or sub, I do think it has long term abilities to go north of 100,000, even potentially 500,000.
Okay, there's another way to look at this chart, which is through the lens of a head and shoulders. I grabbed this from your Twitter. I hadn't seen it framed quite like this, kind of a head and shoulders on tilt a little bit here. Does that generally point you to the same conclusions as the other chart?
Yeah, it does. If you calculate, so what's amazing about a head and shoulders pattern is that by taking the high of the head, you drop a plumb line down to the neckline, and that distance you can map out. You take that distance, and when it breaks the neckline there, that support at 40,000, you can actually calculate the target, and that actually gives us about a $17,000 target. Now, head and shoulders patterns are not the greatest patterns. They fail quite often, but it does give us a sense that if this did play out, it's telling you that that sub 20,000 is definitely in the cards.
All right. Now, you mentioned the connection between Bitcoin and stocks that you're still putting in the same camp. I think the evidence here is that that's the way to think about it. You mentioned stocks. Your framework you're using is for downside this year. Tell me about the S&P 500. What are the levels that are important right now?
Yeah, so right now we're still trading in this upward sloping channel, right? It started back in May of 2020 and it's kind of continued up. My one concern is that if you look at the S&P over the last month or so, the highs are getting less and less. So if you look back a year ago, the highs were significantly higher each time. And now we're seeing these highs that are getting just above the previous high and then faltering and falling back down. And what I'm looking for is that channel to potentially break in the next couple of weeks or so. And once that happens, the upward trend has broken and you have to start looking for more significant downside. And really, if you look at the market, right, there are so many stocks already in bear market territory. It's been the Apples, the Microsofts that have been holding up the market. My fear is that those will finally play catch up and that will be the breaking point for this market.
It looks like Microsoft is doing some of that here today. That's the one that to me makes sense as the first to break, given how cloud just blew up that whole sector. So if the S&P leaves that channel and starts to dip, almost certainly, we're going to get the NASDAQ breaking its uptrend as well. And are there any clear stopping points along the way?
There are. I mean, you'll have, the mentality for investors is to buy every dip. So the bigger the dip, you will have buyers stepping in, which means you're going to get great bounces. So I think this market is now becoming more and more of a trader's market where you can buy the dips and sell the rips, essentially, but you have to be ready for the more downside to come. I have a worst case scenario on the S&P of about 34 to 3,500 that would be late 2022, early 2023 as a
That'll
target.
hurt.
But again, yeah, I mean, that's basically taking us back to that pre-COVID high just before the big March 2020 sell-off. And just to be clear, the Fed is choreographing this, right? So the Fed has said, hey, we're tapering. We want to raise interest rates. We want to reduce our balance sheet. If you look at the opposite of that, when they were adding to their balance sheet, when they were lowering interest rates, that was the fuel to push the market up. So it only makes sense that investors should expect a pullback or a drop when they're taking those measures away.
Gareth, you this afternoon tweeted about ARKK. I wanted to throw that your way, if you don't mind, because after today's brutality, where does it go? I mean, this just seems like a knife that cuts any potential hand that gets in its way.
Yes. So number one, you're right on top of things, man. I tweeted that out just a couple minutes ago, so good job. So ARK Invest, big fall. I'm a swing trader, so I'm looking for potentially the levels to go long. And I do think ARK gets a bounce potentially right around $74.50. There's two trend lines that are converging right at that level. Now, again, for those watching, this isn't something where I'm saying this is a long-term investment. This would be a short-term play for a 5 or 10% bounce, on a swing trade basis. But yeah, I mean, ARK has been crushed. I mean, all the stocks that were Cathie Wood's darlings have been absolutely annihilated. And I do think you'll get bounces, great bounces, but ultimately it probably does go lower.
Okay, so you're saying that bounce, you might still have to ebb a little bit lower to 75-ish or so? Is that the level?
Yeah, the level's just below 75. So
okay.
74.50 or so, I'll be looking to pick up a little bit on that. And I'll probably add in stages. In panic markets, the bottoms are very hard to pick. So I don't try to pick them directly. I kind of start at 74.50. I'll add some more at 73 and so forth, and just kind of accumulate waiting for that big snapback bounce that I do think probably takes us maybe back to 90. So again, percentage-wise, that would be a pretty nice move if you're a swing trader.
All right, Gareth, let's end on a positive note. Long-term chart that you do think has potential is for gold. I think it's a super interesting chart. We've been getting higher lows now since the spring of last year, but it can't get out of its own way. Every time we get to around 1850, party ends. Is this time going to be different?
Yeah, I do think this time is different. I think 2022 is going to be the year that gold breaks out of this consolidation phase. So if you look at 2019 to 2020, it was a massive move up. We've now been chopping sideways, consolidating, digesting that big move up. You're now going to likely see a breakout to new highs. I think 2,600 by the end of this year, maybe even more. But I do expect gold to be the best performing asset, the metals in general, for 2022.
All right, a nice debut hit of the year to put some projections on our list. Thank you, Gareth, and we'll be in touch. Thanks a lot.
Thank you.
Sure thing. Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com.